Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As uncertainty over pervasive inflation, rising interest rates and the potential for a recession lingers on. However, all eyes now turn to the much awaited central bankers debate at the ECB forum, which includes U.S. Federal Chairman Jerome Powell and also Christina Lagarde from the ECB and the Bank of England, Andrew Bailey. The market will be keeping very close watch on how they talk about tackling inflation. Along with that, we also get the US first quarter GDP, which is expected to also may rattle markets. Reason behind that is the US consumer confidence dropped to a 16-month low in June as worries about high inflation left consumers to anticipate that the economy would slow significantly or even slide into a recession into the second half of this year. Also today we've got the retail sales, which came out better than expected after the Australian Bureau of Statistics said that the market came in as previous month of 0.9, beating the estimate of 0.4%. Looking at the technicals, we can see the market's under a little bit of pressure as it slipped closer towards 68, 45, 55. As I've said before, I feel the market may stage a rebound off this level and eventually see a rally back towards the top side of the range, anywhere from 70 to 71 cents. Keep an eye on this technical because as the market is sliding for the third day, the indicator could actually snap because it's still holding to bullish divergence. Along with that, the MACD is also showing some divergence as well. So I'm not getting negative. I just feel there's better opportunity to get into this market as long as we maintain above 68, 45, 55. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, we can see that the euro slipped slightly as the dollar grabs the level of 104 and now trading at 104.20. In light of the pattern though, the market is finding support presently at 104.80, and I feel that we could still see a rise up to that top side call, which is still at 106 to 106.65. I'm not going to get too negative. I like the way this pattern has been unfolded to the bull case, and there is still potential as long as we maintain it and not close under from New York at 104.80. Dollar yen, well, you can see I've drawn in these lines because I feel they do represent something in terms of a trend, and dollar yen's not quite there yet. As the bull trend continues to the top side, the divergence continues to the downside, being bearish. Therefore, I feel the market will eventually snap and show a significant downturn. But we need a little bit more evidence to support that, and that is a break of 135.40. If we see that, that would give a move back towards 133.70 to 90. However, with that all being said, if we do see a rejection from here, there can still be room to rally on towards this top side, and it may even just be a spike and then plummet hard. So it will be very difficult to trade. I would like to point that out. But overall, if we catch the right side of the trade in the right time frame, and then we can maybe be able to benefit from the divergence and also from a potential blow off top if that emerges. Sterling would have been under a little bit of pressure since it dropped just overnight. However, I still feel that the support at this stage at 121.70 is putting a bit of defense there, and it did also a few days ago, as you can see from these two hammers. Let's see if the market can find somewhere in the back of the level here that we could find support and rebound again, and therefore look towards that top side of 122.65 and on towards 124. Sterling CAD since taking out 157.45 is showing a little bit of momentum, and therefore could see a rebound, and if so, looking back towards 157.55. A close above there will give us further indication that the market's reinstated a possible bullish come. to take the market higher back towards 158 to 159. Gold is remaining under pressure, that is. As you can see, the market slipped under 1,820 and heading towards 1,814 to 16. If we see a break there, then there is room to see a further slide down towards 1,800, 01 to 04 and reassess. Well, the break recently of 109 and the rally on to 111 is giving it back quite quickly. Although the break didn't ignite a strong rally up towards 114, the market is under a little bit of stress, as we can see here, and therefore could see a little bit of whipsaw price action into the European session. Now we need to close under 109.45 to reinstate the downside back to 107 to 103. But if we don't get that in the next 12 hours of New York close, then the 111.60.80 may be rechallenged again. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.